Nasdaq actually made a rule change to their index to include SpaceX already within 15 days. And also, they're gonna give it a bigger weighting than they would have otherwise. They're gonna triple the weighting. They wanted you to buy and hold on to your shares. And I think, as we can see further down also, they really wanted to manufacture scarcity of the shares. So they created a lot of hype. The float was really low. The research actually shows that that is usually a drag on your performance of the index fund because other people can exploit that, right? If other people know that you will buy, they will just buy a little bit before you do and then sell it to you. All right. Hi, everybody. I think we're gonna start. People are still gonna drop in, but that's fine. We can start already. We have a lot to go through. I did a lot of research and I find it fascinating. I find it interesting. It also helps us to understand what's going to happen later with Anthropic and OpenAI and later IPOs and how they might impact your index funds that you already own. Yeah, but basically today we're going to answer 4 questions. What is an IPO? What happened with SpaceX specifically? We're going to look at that case in detail. We're going to look at what does it mean for your passive index funds and if there's anything like we can discuss if there's anything you should do about it or if there's anything you can do about it. So yeah, we're going to go through those questions. And a few disclaimers. This is not personal financial advice, of course. This is just, we're just here talking about this topic. Another disclaimer is I relied on a lot of AI to do this research that you see in this file, and I was not able to manually verify every single claim that you see below in these notes. So I can't guarantee for the correctness. Just be aware of that. But I did many cross checks and I used different AIs to check each other. So I hope it's correct, but I just can't guarantee it. Also, I'm gonna record this meeting. I don't know if I'll publish it. I don't know if I'll put it on YouTube. If you don't want to be recorded, just stay quiet, and then you're safe. You can always use the chat though if you want, and I'll try to check the chat as well during this next hour. And if I don't see and if I miss it, like somebody can also like poke me and tell me something is in the chat. Also, and finally, this is a meetup, not a presentation, so. Having said that, you can always interrupt me and ask a question while I start. Yeah, but there's a lot of content, so at some point I might just say, all right, no more questions. We have to continue because there's a lot of content, and I do want to finish on time in 55 minutes. But just one last note. It's good to see you guys. Also, I know Pascal, I know Chris. I know Neil. I know there's 2 Chris in the call, and hi Joe, and also is it Jesus or Jesus? Hi guys, good to see you. Good to have you here. Thanks for being here. All right, yeah, we're just gonna continue. People will drop in and drop out during the call. Hi Reva. All right, so yeah, let's start. And as I said, you can ask questions during the meetup. But just like when we look at SpaceX and what is an IPO and why would the shares go and trade on an exchange. Let's just look at one step back. What is a company? How is it funded? How is it founded also? And basically a company can own assets, it can do business, it can sign contracts, it can hire people, it can do all those things. And the reason why many founders choose to found a company is risk separation, because the business will do all those things, and as a founder you can mitigate risk. And so if you do something wrong and if you get sued, then all you lose is basically the company might go bankrupt and you might lose the capital that went into that business in the first place. But basically you're pretty safe unless you did something criminal, maybe as a private person. So that's why anybody would found a company in the first place. So that's one major reason. Yeah, and basically also a company is a machine for organizing claims on future value. So when talking about SpaceX and why you want to buy a share of SpaceX, that's why, because you want to own a claim on SpaceX future value. And there's different forms of companies, limited liability companies and corporation. In German, we say Aktiengesellschaft. And it's the foundation of a company is different in all over the world, depending on the geography. There's fees involved and you need to put in capital sometimes, but also sometimes not. I found in Delaware, you barely need any capital to found a company, and in New York either. But in Switzerland, for example, where I'm based in Zurich, you need at least 20,000 Swiss francs and put that in capital, in form of capital into the company. All right. And now talking about IPOs, let's also talk about what are the alternatives to an IPO. You can of course stay private, and the first, but then the question is, how do you fund the company, right? And so the first money that a company receives is usually from the founders, and after that from angel investors, maybe employees, from venture funds, from sovereign wealth funds, even maybe. And in there's different seed rounds in venture capital, and they're usually called Series A, B, C, and so on. And what the company distributes for this funding is usually called preferred stock. One distinction that's also important for SpaceX, there's a primary sale and secondary sale. So primary sale is when new shares are issued, and secondary sale is when existing owners sell their shares. And what we saw in the SpaceX IPO is a primary sale. So those shares that were just sold last week and started trading at the Nasdaq exchange, they came from a primary sale. They were newly minted. The existing shareholder base was diluted, and that was a primary sale. Private market funding has become super large in recent years. I feel like this is a new phenomenon. Companies are deciding to stay private for longer. Sorry, Chris, I'm just going to mute you. Companies are deciding to stay private for longer. Yeah, they're able to raise billions privately. And yeah, we see SpaceX, Anthropic, OpenAI all become just huge without ever going public. And here's an interesting example of Anthropic. They're still privately held. And we see how the company was founded. So not all information about Anthropic is public. There's going to be an IPO soon, probably, for Anthropic. So it's interesting to look at how was Anthropic founded until now. And it was founded in 2021 by these guys, Dario Amodei, who's the current CEO, and a few more. We don't know how much was the initial funding capital. And then there were multiple series where they raised capital. And as you can see, they were able to raise billions without ever going public. So they had like a Series H already, where they raised 65 billion at a valuation of 965 billion, so almost $1 trillion valuation. And they already drafted an S1 document at the SEC for the IPO process. Yeah, we cannot perfectly reconstruct what happened to Anthropic so far because they're still private, but this is what we can see from public announcements, and we can see that in today's world, a lot of companies choose to stay private for longer, and they get huge, they get enormous, they get $1 trillion valuations without actually going public. And here's just a few examples. We have Anthropic of privately held companies. We have Anthropic and OpenAI. ByteDance is another interesting one. I think they own TikTok. Stripe is another interesting one. Waymo, which I think is owned by Google, and Databricks. All right. And now let's look at what happened to SpaceX until the IPO. So SpaceX was founded in 2002, among other people, by Elon Musk, and he put in apparently 100 million which he had from his previous ventures, including PayPal. Then they got multiple rounds of funding in 2008 and 2015. Google bought actually, they bought a 10% stake in SpaceX, which is interesting. So like for them, I guess the IPO is amazing. They're going to be able to cash out soon and sell their shares if they want to. And then SpaceX merged over the years with xAI, and xAI was founded in 2023, so not that long ago, 3 years ago. They also had a funding series, and xAI actually acquired X and Twitter. So it's complicated. So the thing that went public last week, yeah, it's a mix of multiple companies that merged over the years and that got funding over the years. And so it's kind of hard to reconstruct when they were founded and when they had funding rounds. All right, and now let's look at what is an IPO and why would anybody want to do it, and what are also maybe the downsides. So an IPO is when, for the first time, a private company offers its shares to the public, and usually, and then it gets the shares of that company get traded on a stock exchange. You can have many reasons why why you might want to go public, why you might want to do an IPO. One of them is you might want access to capital. You want to raise money, you want liquidity, visibility as well. So it's also kind of a marketing gag. So, right now everybody's talking about SpaceX. So you get a lot of visibility if you have a successful IPO. Another reason might be you might want to do acquisitions in the future. And for that, you need currency, or often if you buy another company, you buy them with your own stock. And so it's easier to do that if you're publicly traded already. Yeah. Giving liquidity to your employees, allowing early investors to sell. So those might all be reasons to go public. There are also some downsides. If you're public, there's additional reporting requirements, disclosure requirements, audit requirements. So there's also some downsides to going public. But yeah, in a nutshell, you get capital and liquidity, but you give up disclosure, scrutiny, and yeah, there's going to be a live ticker of your market cap. So maybe some companies might not want that. Now let's look at SpaceX. What was sold in the IPO? They sold Class A common stock. They sold 555 newly minted Class A shares at a price of 135. The total proceeds were just short of 75 billion US dollars. There was an underwriting discount that was paid to the underwriters. They got the shares at a discount. Those underwriters include Goldman Sachs, Morgan Stanley, JP Morgan, Citigroup, and UBS. And there were also offering expenses. Those are like filing fees. They were paid to lawyers, to auditors. They were paid to the exchange, to Nasdaq, and so on. Yeah, to the law firms and so on. So there's also cost involved in an IPO. And what's interesting is there's the underwriters have a 30-day option to buy more shares. So they can buy an additional 83 million shares. And if they do that, that would raise more money for SpaceX, and that would also increase the float that is traded on the exchange. If you participate in the IPO, what you get is you get economic exposure to SpaceX, so you get a claim to their future earnings, to the dividends that they pay out, and you even get voting rights. But as we'll see in a moment, Class A shares have really low voting rights. So you're actually not really getting voting rights in the company. Yeah, here we can see the underwriters who, like, out of those 555 million shares that were sold in the IPO, 111 million went to Goldman Sachs, 111 million went to Morgan Stanley, and so on. And that's how we get to the total of 555 million. And so who was actually able to buy those shares? it was those underwriters, but also there were some retail investors. For example, Fidelity offered their clients. So if Fidelity is your broker and you had at least $2,000 in your account, you were able to buy the SpaceX share at a price of $135. You can do with this whatever you want. You can sell it immediately. But Fidelity said if you do that, they want you to wait at least 15 days. But if you sell it anyway, they would ban you from future IPOs for 6 months. And if you violate this rule twice, they'll ban you for a year. But you can do whatever you want. So if Fidelity is your broker, you could have bought the IPO, the SpaceX share at 135, and you could have sold it at the opening on the Nasdaq exchange when it started
Nothing,
trading.
nothing shady about that, right?
Yeah. No, nothing shady.
Yeah.
What do you think? What do you think is shady about it?
I mean, do I need to buy it? I got this exorbitant privilege to be one of the few peasants which is allowed to buy the IPO when it goes live. But then I have to hold it for 15 days so that the insiders or all the other big guys can dump while I hold the bags, right? And if
Yeah.
I
The
and
lockup.
if I and if I don't, you ban me from futures IPOs, considering that we got Anthropic and OpenAI coming up. I mean, it's an incentive to be fucked, right?
Yeah.
I wouldn't buy under those conditions.
Yeah. Exactly. They wanted you to buy and hold on to your shares. And I think, as we can see further down, also they really wanted to manufacture scarcity
Yeah,
of the shares. So they created a lot of hype. The float was really low.
yeah.
We'll see that. I'll get to that right now. So what happened when it started trading? It actually opened higher. So it opened at 150. That's just how the exchange work. There's bid orders and there's ask orders and then they meet somewhere in the middle. And so it opened at 150. It traded near 160, and more than 500 million shares were traded on the first day. So that's a that's a that's a lot of shares. But it gapped higher immediately. So yeah. If you actually got a share at 135 and you sold immediately at the opening, you had an immediate profit. And it's interesting to look at who actually owns SpaceX now. And so here we have a snapshot of after the IPO, and we see that Elon Musk owns 84% of the voting rights because he has Class B shares, which were not sold in the IPO. And he has 49% economic claim. And then there's the other directors. Elon Musk is one of the directors. That's why some of these numbers don't add up to 100. But the directors combined on 53% of the economic claim and 85% of the voting power. Yeah, but that's just an interesting snapshot. And so, when are these people actually allowed to sell their shares on the Nasdaq exchange? So on December, so right now, what was sold on the exchange was 4.25% of the company, and the underwriters have the option to get more. So if they exercise that option, then there's 4.9% of the company traded on the exchange. And then on December 8th, one lockup expires, and then about 40% of the company will that's going to be a big date. December 8th, 2026. That's when a lot of the previous owners are able to sell their shares. And Elon Musk himself, his lockup period will end on June 12th, 2027. So that's in 1 year. And at that point, he can sell all his shares if he wants to. Yeah, so that's when like 49% of the company of the shares might hit the market. We don't know if he will actually do that, but he might do that. And yeah, it's interesting. What makes this IPO interesting is this kind of manufactured scarcity that they created, and they talk about this in different YouTube videos. Prof G talks about that. And Damien in another YouTube video talks about that as well. So only 5% of the company was sold in the IPO. And if we look at if that is typical, there's some research showing that the median public float was 14.5%. So usually a bigger share of the company gets sold during an IPO. And SpaceX is super small. So 4.7% float is super small. It's not typical at all. So that's why SpaceX is getting a lot of criticism of creating and manufacturing scarcity and hype around its stock, and to manipulate the price, of course, and get a higher valuation in the end. So let's look at index funds. Let's look at what this all might mean for you. Just like in the beginning, we can say this is not a new problem. Like companies go public all the time. So SpaceX just is just another one of those. Yeah, but it's SpaceX is still special because it's a huge market cap. Only a tiny float, a tiny portion of the company went public, and a lot of indices made changes to their rules. So SpaceX will enter faster in their index, and yeah, there's predictable demand now. So investors can anticipate when those in like, for example, we know 100% when exactly SpaceX will enter the Nasdaq index, and also at what weight. And so we know that whoever owns the Nasdaq will then go and automatically they'll buy this share. And so that's another issue with SpaceX. So there's predictable trades, and the research actually shows that that is usually a drag on your performance of the index fund, because other people can exploit that, right? If other people know that you will buy, they will just buy a little bit before you do and then sell it to you. All right, and so we can see there were a lot of rules changes. Nasdaq made a rule change. FTSE made a rule change. CRSP, who the popular VTI ETF tracks the CRSP index. They
Silvan,
all.
may I
Mhm.
interrupt you for a minute? Just for the sake of completeness, yeah, it's right that you may have people which are trying to front run you because they have the ability to do that, while instead you cannot as a retailer. But the other side of the trade, because we never know if it's going to go one way or the other, but the other side may be all these retailers with their portfolio, right? If they want, I mean, unless they are going to keep on buying the index and the index will adjust and they are going to keep on doing the same thing, then no biggies. But if they have a structured or a diversified portfolio, what they're going to do, maybe in anticipation of SpaceX coming into the index, would be actually selling a few stocks that they have in order to make space to create liquidity to then buy SpaceX when it enters the index, so that now they can count on the passive flows. But that would generate overall on other stocks down pressure. And if you add on
Yeah.
top of that a sell the news event, everyone is waiting for the fast tracking in, and at that point, all the insiders are just selling on you. So it could be a drag on the overall index for sure.
Yeah, definitely. And like you said, there will be selling pressure on other indices. So if suddenly, let's imagine SpaceX, this is not real numbers, but but if it suddenly was 1% of your ETF, then the ETF has to sell that amount of the existing components.
Yeah, to
And
make
usually those are Nvidia and Apple and
yeah,
Microsoft and Google and
to
the Mac
to
7.
make yeah they have to make space for the new to a newcomer, right?
Exactly. So there will be selling pressure on those titles.
Yeah.
Absolutely. So yeah, Nasdaq actually made a rule change to their index, to include SpaceX already within 15 days. And also, they're gonna give it a bigger weighting than they would have otherwise. They're gonna triple the weighting of SpaceX. And the thing is, Nasdaq has an incentive problem here because Nasdaq is not only an index provider, it's also the exchange that wanted to attract SpaceX. So they wanted to win SpaceX. Like SpaceX could have gone to any other stock exchange. They could have gone to the New York Stock Exchange, or there's many exchanges, but Nasdaq wanted them. And they also made this change to their index. So there's a bit of a conflict of interest. The other indexes, they didn't make uh, as much of a change. They didn't, for example, uh, they didn't adjust the low float market cap. They don't triple weight SpaceX. But still, they added sometimes fast track rules to include it faster than it would have been included otherwise. A few noticeable exceptions are MSCI, who I think made no changes to their indices, and also S&P 500, which they have popular ETFs that are tracking the S&P 500, like the VOO, the SPY, and the IVV. Those are all huge ETFs, and they're not going to be buying SpaceX anytime soon. And we'll see more about that. And how big is the weighting actually going to be? So in the QQQ, in the Nasdaq, SpaceX is going to have a weighting of more or less 0.6%. So even though they add this triple weight for SpaceX, it's still kind of small.
Yeah.
And typical weighting in other ETFs, for example, VTI or VT, which tracks the FTSE Global All Cap Index. Typical weighting is 0.2%. So I don't know, like for most investors, this is SpaceX is going to be a small part of your portfolio.
Yeah, I don't think you should be worried about that too
I
much.
I agree. It's the triple weighting in the Nasdaq is a bit shady. So if you own the Nasdaq, I don't know, like that's a
Yeah, I
bit
mean,
weird.
yeah, I mean, I can understand if you don't like the principle that they got the fast tracking and the triple weighting, but for your own portfolio, if you are holding these index funds, I mean,
Yeah.
zero point six
It's a
percent,
very
you know,
it's a very small weight. And it's going to
yeah,
be interesting. So let's assume SpaceX performs super, super well. Then the Qs, the Nasdaq will outperform the other indices because it's giving it an artificial big weight. But if it doesn't perform well, then the Nasdaq will drag slightly the other indices. So it's going to be interesting to see what happens next with the price and also the performance of these indices. There's some interesting charts showing how big SpaceX is. So SpaceX is by far the biggest IPO that ever happened. It has a valuation of about $2 trillion, and they raised 75 billion in the IPO. Here's another chart showing the same thing. The second biggest IPO before that was Saudi Aramco in 2019. And SpaceX at the current, more or less, or as of June 12th, has a huge market cap. It is actually the fifth biggest company in the world. I think they just overtook Amazon as well. So they're huge. It's a huge company that just went public. And yeah, so the total market cap of the company is about 2.5 trillion. From that amount, only 122 billion are traded on the exchange. So a typical fund would weight SpaceX only at that number, except Nasdaq. They tripled that. They weighted at 367 billion. But yeah, the story of this table is the weighting is going to be pretty low. And what's interesting in this chart is we see how many trillions track an index, and we see most funds track the S&P 500. There's more than 7 trillion US dollars tracking the S&P 500, and they have no fast track of for SpaceX. So they're not gonna include SpaceX for at least 1 year, and they will only include it if it's profitable until then. But yeah, there's the other indices, including CRSP, Russell 1000, MSCI, Nasdaq, of course. They will include it. Yeah, there's the now we're gonna talk about, are IPOs a good investment historically? And what's super cool is Charlie Bieo created this chart of past IPOs. So we see Palantir and Airbnb, ARM, Twitter, Snap, Facebook, and we see when they went live, when was the IPO, what was the return after 1 year, and what was the max drawdown within that year. And I think what this table shows is most IPOs lost money after the first year of trading. And
Yeah,
there's even a
I just posted another version of that in the chart, in the chat. It's
nice.
not really an Excel sheet, but it's more of a chart, a bar chart, right?
Yeah, nice. Thanks for the screenshot. Most hype IPOs deliver a 30 and median drawdown 6 months after their first month peak. Yeah, yeah, absolutely. There's also an ETF called the Renaissance IPO ETF, and since 2014, it is up 177%, but it's lagging the S the SPY, which tracks the S&P 500, which is almost double that in terms of performance. But it's volatile, so if you sold in 2021, then it performed super well. So it's not there's no definitive answer maybe if IPOs are a good investment or not, but yeah, on average they were not. There's also this paper called Retail IPO Access, and it found that retail access IPOs declined by more than 60% from offer price after 1 year on average. And they declined more than other IPOs which did not have retail access. So apparently not every IPO also has retail access. SpaceX did. Yeah, so yeah, those retail IPOs they tend to underperform other IPOs and they tend to underperform the market. Um, all right, this is the last question that we're gonna answer. And I'm sorry, this was tense. This is not typical. This was not really a meetup. This is more of a presentation. But are there alternatives to like if for some reason you don't want to invest in IPOs, or if you want to add any other tilt to your index, are there alternatives? And so two that were mentioned, especially by Ben Felix, are dimensional ETFs and Avantis ETFs. But also the S&P 500, actually, if you think about it, because they didn't add a fast track for SpaceX. So they're not going to include SpaceX anytime soon. So if you want to avoid SpaceX, you could just buy the S&P 500. But yeah, dimensional, they say their ETFs go beyond indexing. And so they still kind of research and evidence-based. They still want to offer broad diversification, but they add those little extras to their ETFs, and some of them might include that they don't participate in the IPOs because the research says they are a bad investment. And I think another thing they tend to do, or another thing that I heard Ben Felix say, was that they don't invest into small cap growth stocks because they also tend to underperform the market. But there's many variations of that. So, but there are alternatives. So if you still want to have broad diversification, if you still want a market cap weighted portfolio, but you don't want to participate in IPOs, there alternatives do exist. Eventually, all those funds will probably also own space, assuming that they actually become profitable because space at the S&P 500 they don't include any company that is not profitable. So but eventually also Avantis and Dimensional will probably own SpaceX at some point. Just not, just they just try to avoid this predictable buying. So one good one good sentence that I found was, yeah, we are broad and low cost, but we are not forced to trade on the index provider's exact timetable. And that's how they try to avoid that performance drag that typical index funds have because there's this predictable buying, and they avoid that. All right. So the final takeaway, and now I'm gonna, this is how I'll conclude. Yeah, the SpaceX IPO was very special and very useful. Yeah, it blends many different things. It's a high quality company, or at least they have a lot of revenue. Yeah, but and there were index rule changes, and the IPO was special. There was a lot of hype around it. And one takeaway might be passive investing still means that the fund follows some rules. There's no real passive like what Nasdaq did to its rules, seems pretty arbitrary, seems pretty active. So even as a passive investor, you're still following some rules and it's still in some way active or arbitrary. And next up, the next IPOs are going to be probably Anthropic, OpenAI, and Databricks. And it's going to be fascinating to see how those go. I'll be curious to see who, like how much hype there's going to be around those IPOs, how big the float is going to be. They probably also try to manufacture scarcity just like SpaceX did, I assume. But yeah, it's going to be fascinating. And it's also going to be fascinating to see how the index providers, how they react. So are we going to see more rules changes? Is the Nasdaq going to try to attract them all and also give them a triple weighting? Yeah, it's going to be fascinating. All right, but that's it. Took me 40 minutes to go through that. That's not typical, I'm sorry. But uh, but yeah, I'll be curious now. We have like 15 minutes to talk about this. What do you guys think? What do you guys think about the SpaceX IPO or the upcoming IPOs? And are you going to do any changes to your portfolio because of this SpaceX story? Or do you have any reactions to anything I said?
It's a late stage cycle behavior at the end of the day, right?
That's what I'm afraid of. Yeah, it
I
seems a
mean,
bit late stage, right? Like
yeah,
if you look at current valuations, they're so
it's
high
not
right now.
it's not just these 3 or 4 mega cap IPOs. It's just the fact that even those already existing, like Meta, Nvidia, Google, they are all coming up with more equity supply because they need to fund these AI infrastructure, and they already went into their cash flow, and from massively positive, now the cash flow it's almost depleted. So they need to go into. I mean, if they wanted to go into the bond market, they would have to pay higher rates now. So they are just selling equities, and it's just let me grab those money from the retail investors since this frenzy keeps going. Because at a point, I won't be able to do that. You know.
Yeah, I think so too. Like the incentive for Anthropic and OpenAI is to go public as fast as they can because because there's yeah, the sentiment is super high right now, at least on the stock market. Consumer sentiment
Yeah.
is low,
Yeah.
but the investors are pretty euphoric. And so
I,
if they go public right now, they'll probably get a high valuation as well, and then maybe they can cash out as well.
Yeah, look at the chart. I mean, I'm not saying this is it, that like the bubble will burst tomorrow, but the behavior, it kind of resembles what happened in the past. And again, the party always gets louder before the cops show up. So it could keep on going for another year. Who knows? But it's just a period where the risk reward it starts to shrink a little bit, in my view. So you need to be careful and nimble in these next few months, I think.
I agree. Are you gonna do anything about it, Neil? Like, do you still
No,
own mostly gold and treasuries?
yeah, I mean, I still own treasuries, and yeah, gold. Now, I just bought a tiny little bit of gold the other week, and I'm already 75% of the position out. Was just playing a technical bounce. Got a very good average price, 4,069, and I closed
Mhm.
most of that at 4,300 and 4,350. So for now, I'm not interested in the long side.
With my portfolio, I still try to stay close to a market cap weighted 100% equity uh, index fund, but I still have a Bitcoin bias and also a little home country bias. I moved a
Hmm.
little bit to Switzerland because we have lower valuations here. And there was an interesting paper by Silverberg, which was mentioned on Ben Felix' podcast, the Rational Reminder podcast, which showed how a home country bias can make a lot of sense. And I also
Okay.
have a small cap tilt because small caps, it's interesting how small caps tend to perform in reflation and deflation, and also they have lower valuations right now. So but I try to stay close to the to something like the VT ETF, so developed market equities. I try to stay close to
Hmm.
that, but I added just a few small tilts because of where we are right now with valuations and concentration of US companies. But I think to the average investor, I would recommend don't do that. Don't do what I did. Probably I'm gonna underperform. I'm probably gonna panic, revert at the worst time. Like when the tilt goes against me, when small caps underperform, when Bitcoin underperforms, probably then at some point I'm gonna throw in the towel and and market cap weight everything. And so I don't recommend what I'm doing,
Yeah. I mean,
but that's what I'm.
it doesn't matter, right? If you live in the US and if you live in dollars, it doesn't really matter for you. So, like for Chris, it won't matter. But for me and you, what do you think about the DXY? What do you think about the dollar relative to other fiat currencies? Because if you think the dollar will go higher in over the coming months or years, then again, these home bias market preference should be revised. Because if the dollar goes higher, it creates the incentive to own US denominated assets and capital flows will move into the US. So your stocks in Europe or Asia not only will underperform nominally, but they will go down against the dollar. So it's for us, we
I
always have to deal with the FX risk.
I agree, but I think we already talked about this. The US companies get
Yeah.
so much revenue from abroad in other currencies. So just because you own US companies doesn't mean you have like a super high exposure to the US dollar. It's higher, of course, than if you own Swiss companies, but they're still
Yeah, I
pretty
mean, but
diversified.
those revenues, which by the way, for the S&P 500, 41% of the revenues are coming from abroad. Well, I mean,
Yeah, it's only 41.
those companies
Mhm.
are US based. So when they
Mhm.
get those money in Europe in Japanese yen, do you think they're gonna take them and keep them denominated in yen or euros or Swiss franc? No, they're gonna swap them for dollars because that's what they need. They pay the
I
bills in
mean,
dollars.
yeah, I agree. You have a bigger US dollar exposure if you own something like the S&P. I agree. All right, any other questions or comments?
I see Chris there. Chris, what you gotta say?
Yeah.
Do you like the IPO?
I am old school. I pay attention to valuations.
Yeah.
And as a comparison, SpaceX connectivity makes $20 billion a year, right?
Yeah.
That's their largest line of business and currently their most profitable. The others,
Start Starlink.
AI makes something and SpaceX, AI makes like 4 billion, SpaceX like 6 billion, something like that, and they lose.
Interesting.
So, so the perspective I offered to my clients on my pre-IPO call was that at $20 billion of revenue, SpaceX is priced at 100 times gross revenue.
That's
Yeah,
insane.
that's
All right.
incredible.
That's like giving somebody who makes 100,000 euros a loan, a house for a mortgage for 10 million euros. It's
Yeah,
a lot.
doesn't make sense.
So as a comparison, Comcast, which is another US based internet provider, Comcast makes 20 billion and is worth 80 billion, like four, maybe 100 billion, 4 to 5 times gross sales. And so I just offered that as a comparison. I mean, I personally didn't buy SpaceX at the IPO or since. I have an order in to buy it at $100 a share. It may never
Yeah,
hit that, and I'm okay. I'm not paying $2 trillion for this company. Maybe I'll pay something
sure,
less.
sure.
There could be some future with their Grok AI. I don't, I'm a little bit unsure about SpaceX as far as for the consumer. I mean, I'm not living
I
in
love
Mother
that.
Earth,
I love that,
so
Chris. The growth that is implied in this valuation that investors are paying is insane. So I think SpaceX, how I mean, how many years would they have to double revenue just to meet the investor expectations, right? They would have to double and double and double and double and double, and then only then they would justify the current valuation. So yeah,
So
it's kind of crazy.
It seemed pricey for me to jump in. I didn't. The addition to the indices, the game is the game. I play the game. I'm very comfortable with it. If SpaceX is 0.6 of the Nasdaq 100, that's just the way it is. If it's 0.07 of the S&P 500, there's nothing I can do. That's so far beyond the needle I can move. You just have to tolerate it. It's almost like a socially conscious investor, Philip Morris, or a cigarette, or some companies in the indices at 0.1, and you just can't avoid it. You just have to accept.
I agree.
You know, you can avoid it altogether, but then you suffer on performance. I'm not going to get into all that. So it's, I tolerate it. It goes into these indices. That's fine. I think it's pricey. Will it drive the indices down? No, I heard the whole presentation. There's a lot of noise by these people about getting hosed, the retail investor being hosed when it gets added to an index. I mean, I don't know. It was good awareness, but I don't think anyone's even going to notice in their index fund. I don't think anyone's going to notice.
Yeah.
So, it's largely driven by the mega caps now, the FANGs, if you would, Facebook, Apple, Amazon, Netflix, Microsoft, Google, still driving a lot of the markets. That's it. I mean, I watched that IPO like a World Cup match, man. I watched every moment.
Yeah.
It was certainly exciting. Certainly exciting. And
you're gonna watch future IPOs as well?
Oh, very much so. I mean, just if Chat, OpenAI or Anthropic come out at big valuations, that's just the way it's going to be. I mean, Silvan, why should you sell LongtermTrends for anything less than the highest price you can get? Just because you're a good company doesn't mean you have to become public. Fidelity Investments, Vanguard Investments, you don't have to become public. It's just a source of raising money for you. So I hold nothing against these companies for staying private. That's their right here in, at least in America, that's their right to stay private.
Absolutely.
And if they want $2 trillion for them, and I don't think they're worth $2 trillion, I don't have to buy it.
I mean, I would do the same if I was Musk. I would try to do the same, like stay private for super long, then create so much hype, do an IPO, add like manufacture scarcity, like get a super high valuation, and then hopefully after 1 year, when your lockup expires, dump it all on the market.
Did you see? Oh no, sorry. Go ahead, Chris. Go ahead.
Well, just one more thought on this, please, Nils, if I may. Then,
sure.
If you are Facebook, Apple, Amazon, Netflix, Microsoft, Google, you're probably looking at yourself 20 years ago and thinking, could I have done the SpaceX IPO play? Should I have stayed private 10 years longer? I don't know the answer, but they use their money effectively to get to their market valuations today. So had they stayed private longer, would they have gotten to where they are? I don't know. But SpaceX took a lead, I guess learned from them and said, why go public at all until the last moment? So SpaceX got all the money for themselves and their employees. There might be something, might be meat on the bone left for us out there. But I just wanted to share that anecdotally, if you look to what Facebook, Apple, Amazon, Netflix, all those guys did, they went public and now they have massive valuation. So SpaceX just stayed private and tried to come in at the top, maybe having learned a lesson from those other.
It's fascinating. It's going to be a playbook to study for any future company. Like it's fascinating. Like it's a great business case. If you're a teacher, looking back at SpaceX is going to be fascinating.
Yeah, it's going to be the best snake oil seller in history, Elon Musk. I'm saying.
I wonder if 2 years from now we look back, or 10 years from now, and who knows what SpaceX will be worth. But maybe it's all gonna be snake oil.
Yeah, nobody knows, but for sure the man has a particular talent for making ugly look like gold. Like if you think about Tesla, it's not making revenue. They are losing against the Chinese electric vehicles manufacturers. So but if you think about now. Yeah, but now Musk is the first trillionaire, right?
Yeah.
And you can go online and read the parallels in between Elon Musk and Rockefeller. But I'm going to ask you, who was really rich, Rockefeller or Musk? Rockefeller had real cash flow. Musk has a lot of high valuation stuff, which is worth that today, but it takes just 1 week in the markets. If you have a sell off all that market cap, it's just fugazi, right? So I don't know. I'll let you decide, but I would pick Rockefeller.
I thought about that too. Like, I don't know how much cash flow. Of course, he has a lot of cash flow, but he doesn't really pay himself an income, a salary. All his wealth is tied up right now in Tesla and SpaceX. And he still has a lockup period right now.
Just at his level, he had some cash flow problems a while ago. He needed a few $1 billion and he couldn't scrounge it together like 5 years ago.
Yeah.
I mean, I wish I had, but again, guys, price of 135 a share at the IPO, nobody had to buy it. Nobody.
Yeah.
You didn't have to buy it. That's the only thing, is that he might be a very good salesperson, but you don't have to buy his stuff. You don't have to. So
yeah. And you also don't have to bet against him. You don't have to short it.
Yeah, I wouldn't bet against him. Right? Absolutely not.
Me neither. Me neither.
Especially in these markets.
I would not bet against him. Is there anything you would like to talk about in future meetups? Any topics? I think this topic was amazing. It was super interesting to take the SpaceX IPO and look at how IPOs work in general and what the impact is on passive index funds.
Something on my mind, Silvan, that I think would be appropriate for this. And I haven't done the research yet, so I don't know the answer. But if we look 10 years ago, if we look 20 years ago, if we look at an index investment strategy that buys large cap, small cap, called US, non-US, what are the 10-year returns for all those indices? What have they been? Is there any reversion to the mean? Can history suggest anything for us going forward, where like US mega caps have really performed well? And you were talking about small caps. Just real quick, what made me think about it here. So some data I have, there's a small cap index that's done 12% a year for the past 10 years. And the S&P has done 15. Well, that's pretty close. For 5 years, it's 6 on small caps, 13 on the S&P. So is there any reversion to the mean strategy to be considered? Something like that, a comparison of the indices. You have all the data on your site, like, leverage the data you have. So something along those lines.
I like that. I like that. And you would look at sectors, maybe at countries, at factors as well.
Oh, keep it big. No. For these calls, I would keep it big, like US, non-US, stocks, bonds, large cap, small cap. That's right there. That's an hour of talk. That's an hour. You don't have to go into utilities and technology and energy and defense. Just large, small, US, non-US stocks, bonds.
Amazing.
That kind of thing would take up a pretty good call. Would be pretty interesting, I'd say.
Thank you, Chris. Mm-hmm. All right. If any of you have any other ideas, you can let me know. You can send me an email. You can join the Discord channel that we have and tell me on Discord. You can tell me on Reddit. You can tell me on LinkedIn. You can tell me anywhere. Thanks for being here.
Thank you for today.
Absolutely. Thanks. Awesome. I'll see you guys in a month, hopefully. Bye.
Goodbye, everyone. Cheers.
Bye.